So, hey guys, in today's video, today is the 22nd of April, Thursday I think, I'm not sure, but let's go over the day, okay? Firstly, during Asia, we didn't open with a gap and we basically manipulated the whole time with like a little down trace or a manipulation to a downside, but it was mainly just focused to manipulating to the upside, and we also broke structure to the upside during Asia session, and we made basically two fair value gaps, which we have inversed one of them, I think. Let's see. No, we didn't. So we respected the gap, and on ES we we inversed that gap on ES. So during Asia, price action was shit basically. During London, however, it was even more shit because we were basically just consolidating and manipulating to both sides, which is not ideal looking back at the market. But as you can see, I marked out a 1 hour gap, which we should have we did inverse this. Yeah. So this wasn't like a key gap because we have already filled most of it. Well, not most, we filled all of it, but it was basically the only gap left until it was obvious for us to go even higher, which we did. And I think that we will be able to grab these highs. I think these are all-time highs. Yeah, so ES is a bit lower because this is the all-time high, and on Nasdaq we already passed all-time highs during this session because it was way closer to it. Yeah, so it was just consolidating, and we made relative equal lows during these sessions because this is London low, this is just a low during Asia, and I like to mark out lows on the hourly, not the 4 hour, but it's not really relevant because it's also low on the 4 hour. Okay, so what happened during New York was that we started by manipulating to the downside, and we made quite a big, well, not retrace, but we could say retrace, but not, because before New York we had this downtrend basically. So it wasn't like a retrace, it was a manipulation to the downside. And we also inversed this 5-minute gap, and on Nasdaq, sorry, we inversed the 5-minute gap on Nasdaq, and we didn't on ES, we didn't even have a gap. So I wanted to look at the 15-minute, and on the 15-minute we had this fair value gap to the upside, basically this whole thing, which we have inversed before market open. So it was looking like an obvious short, but as you can see, it didn't quite happen. But when session opened, this is, I think, a BPR. I'm not sure, but it's double gaps basically. And because we have inversed this gap, or BPR, or I don't know what the fuck is this, it was obviously short, but not short long after this. But I still remained biased, which is not a good thing because, as you can see, I got stopped out because on Nasdaq, if we scale down to 1 minute, you can see that we have inversed one gap before entering, before I have entered, inversed two gaps on the 1 minute, and because we have also broke structure to the downside, for me it was enough to go short. And you can see on ES we have, wait, yeah, on ES we also broke structure to the downside on a 1 minute. so it was looking like great short. And looking back at it, we also made equal lows on ES, which you didn't want to grab. But it's only on the 1 minute, but these are still equal lows. But yeah, I think I overlooked the fact that we were in a uptrend on the hourly, and we have also inversed this 15-minute gap. And I marked out equilibriums. These are the green lines, but they are irrelevant now. And yeah, I looked over this fact that we basically just inverse the gap. And next time I should be more careful about this, because if the trend is bullish, which it was, and we have just inversed the gap, then it's going to be strong. And as you can see, the bullish side won today. And I also wanted to say that this whole gap, I think, is the hourly gap that I have marked out. The fuck am I? Yeah, that's the gap, because I wanted to mention this because when I took the trade, I still, or not I, this whole gap wasn't inversed that time, so that's why for me it looked like it's going to respect this gap. And because we have broke structure on the minute, and it looked like that we were going to or we did, yeah, we did. No, this is the minute. 1 minute chart. Let's see the 5 minute. Yeah, on the 5 minute we didn't break structure, but because during open we had this massive down candle on the 5 minute, it looked like a obvious short to these lows than these, which were relatively close, and then this one. But yeah, next time I should be more patient, because I took this shade on 1551, which is 99.51 in the US or in Miami or New York. So I should wait for the hourly close, and if I would have waited for it, then as you can see, I could have known that we inverse this gap. And yeah, on ES we also broke structures to the upside. Let's see on the 5 minute. Yeah, we haven't, but 10 minutes after that we have also broke structure to the upside. So I should have waited more and be more patient. And also this is a hourly gap, I think. Hourly, not gap, man. SMT. Yeah, from these highs to these highs. And on Nasdaq we have swept this high, I think, and on ES we were under that, basically. So this was also a confluence for me going short, but as you can see, it didn't happen. And next time I should be more careful with the trends, because a lot can happen during these times. So yeah, not the best trade, but I'm quite happy because I had my reasons to go short, and I think it was a C- setup. So not the best, but I didn't risk much on it. And also I will show you guys my ranking system, because I have developed and I have been working on a new trading system, which is not a whole new trading system, but basically this grading these setups, because for me it's more logical to take trades on higher risk when you are seeing an A+ setup or a B+ or something like that. And what I've been working on is basically a whole table or sheet, like you can write it anywhere you want, but these are going to be boxes, so very fucking simple. You just basically tick the boxes, and let's say you have ticked 4 boxes out of the 5 which you have needed, then it's going to be a B+, B-. I will share it with you guys, and then you can basically calculate your risk, and you can, for example, say if it's a B-, then I should only risk 1.5%. If it's an A+ setup, then I can risk, let's say, 3 or 4%. Okay. If it's a C- or a D- trade, then you shouldn't even take it in the first place. But if you want to, you can take it with 1 or 0.5% risk, and so on. Okay. So I will share that with you guys, and see you in the next one. Okay. Bye bye.